The idea I'm going to repeat for this video is so simple. Copper over gold means confidence over fear. Most investors spend their entire lives looking in the rearview mirror. They're watching earnings that have already happened. They're watching economic reports that describe what had already happened. They're watching analysis and analysts explain things that happened yesterday. But the men who make serious money are always trying to answer a different question. What happens next? And one of the most powerful indicators for answering that question is hiding in plain sight. The copper to gold ratio. Now, why does this matter? Because copper and gold tell two completely different stories about the future. Gold is where money runs when it is scared. When investors are worried about recessions, wars, financial instability, or uncertainty, they flock towards gold. Gold is the financial equivalent of locking the doors and staying inside during a storm. Copper is the opposite. Copper is what gets used when economies are expanding. It's in houses, it's in power grids, it's in electric vehicles, it's in factories, it's in solar farms, it's in data centers. You cannot build the future without copper. So when copper starts outperforming gold, the market is quietly telling you something. Confidence is beating fear. And that's what I'm trying to explain to you today. Copper over gold means confidence over fear. So let's deep what that actually means. A ratio is simply a fight, a tug of war. On one side you have fear, on the other side you have growth. On one side you have protection, on the other side you have expansion. Every day the market votes with real money, and the vote shows up in the copper to gold ratio. Now here's where things get interesting. Many people assume the stock market predicts economic growth. Sometimes it does. Sometimes it does. But commodities often sniff out changes before everyone else. Why? Because commodities deal with reality. A company can tell investors whatever story it wants. A politician can promise whatever they want. An economist can make whatever forecast they want. But if businesses are building more factories, laying more power lines, and constructing more infrastructure, they need copper. There is nowhere to hide. The demand is real. And that is why smart money watches copper so carefully. Nearly every major trend of the next decade needs enormous amounts of copper. AI, data centers, electric vehicles, power infrastructure, renewable energy, urbanization. Every single one requires mountains of the stuff, which means copper isn't just a metal. It's a vote on economic activity itself. Now here's the practical application. Don't just look at gold. Don't just look at copper. Create a copper to gold ratio chart. Take the price of copper and divide it by the price of gold. Then watch the trend. If the ratio is rising, copper is outperforming gold. Confidence is outperforming fear. Growth is outperforming safety. Risk on is outperforming risk off. So it's bullish. If the ratio is falling, the opposite is happening. Investors are becoming defensive. Fear is growing. Risk appetite is shrinking. That doesn't guarantee a bear market. Nothing does. But it tells you which direction the crowd is leaning. And understanding crowd psychology is where fortunes are made. So let's take a step back. Most people react to headlines. The wealthy often react to signals. By the time the news is celebrating economic growth, asset prices have already moved. By the time everyone agrees a bull market is here, a large portion of the gains have already been made. The market rewards anticipation, not reaction. That's why indicators like copper to gold ratio matter. They're not telling you what happened. They're giving you clues about what investors expect to happen, and expectations move markets. A perfect example of this principle happened during multiple economic recoveries throughout history. Before optimism showed up in newspapers, headlines, before analysts started upgrading forecasts, copper often began strengthening relative to gold. The market started whispering before it started shouting, and those whispers became trends. Those trends become opportunities, and those opportunities became wealth. That's why I want you to remember one thing from this entire video. Not 10 things, not 5 things, one thing. Copper over gold means confidence over fear. When confidence rises, economies tend to expand. When economies expand, businesses invest. When businesses invest, opportunities multiply. And when opportunities multiply, wealth gets created. So the next time somebody asks you where the economy is headed, don't start with a headline. Don't start with a politician. Don't start with an analyst. Ask yourself a much simpler question. Is copper beating gold? Because when confidence starts beating fear, the market is often preparing to move long before the crowd notices. Do not be deceived.